Rajkiran Rai, the MD and CEO, joins us on the show right now. Mr. Rajkiran, thanks for joining in. You know, your Q4 operating profit and efficiency has seen a huge improvement, growing much faster than your NII as well. Was this because of the treasury gains that you incurred this quarter?
Yeah, operating efficiency of the bank has improved substantially. If you see year on year, operating profit has grown by almost 22% from roughly 7,500 crores previous year to more than 9,100 crores this year. And even this quarter, it has done well. Yes, of course, Treasury has contributed. But if you look at the net interest income also, it has grown. So I think operating efficiency in all parameters we have grown. But then prudentially, bank has provided upfront certain provisions. Because of that, we have incurred losses. So otherwise, I think the bank performance has substantially improved.
What about credit demand? How has that panned out in the first 3 months of the year?
Generally, for banking industry, the first quarter is weak on credit growth. It is a trend. And this year, added to that, we have the COVID impact. So YOY, we expect to maintain the same credit growth rate of 5 to 6%. But then if you compare to March, quarter on quarter, the credit growth may be muted.
So how are you approaching the lending and to existing clients? You know, clients where you have a comfort, where you understand the credit history is strong. Are you lending them, or you are also refraining from lending to existing good quality clients?
Actually, we are reaching out. Mostly the initial phase, it is reaching out to the existing customers. So April, I think it was more of a basic operations for the banking industry, where we opened the branch with minimum staff, just serviced the customer to draw their amounts from the accounts and all that. This is minimum service. The number of loans sanctioned went down substantially in April. In May, it started picking up. And in June, we are already seeing almost normal performance, because the branches are fully activated now. The credit has started. And the government push on the guarantee schemes has really resulted in some good activity at the branch level. So we are reaching out to the existing customer with that additional limits.
Fair point. But in general, where do you think the NPA cycle and the delinquency and existing cash flow in the system is moving?
Yeah, actually, we had started much before this guarantee scheme came. We started an emergency line of credit, which is applicable to all customers, where we said we'll give you 10% of the working capital as an additional limit. So this is going on. Under this scheme, overall, we would have done about 9,000 crores. We reached out to even top-up personal loans. We also reached out to SHGs in addition to our corporates. So this is one thing we did. And after that, this guarantee scheme came, where it is applicable for limits fund outstanding up to 25 crores. And in our bank, there are 7.5 lakh customers to be reached out. And I'm very happy to say, as of yesterday, we have reached almost 2.4 lakh customers. So it is almost 30-35% of the customers already reached out. And all other customers also, we have sent mails, messages. So we expect that in another fortnight, we'll cover all these MSME customers who are existing customers, and we will give them that additional limit, which is fully guaranteed. So I'm very hopeful that will help actually to all these MSMEs to reactivate and start running their businesses.
What are you, or rather, where is it that you're seeing green shoots, if at all, within your lending segments? Would it be agriculture? Would it be MSMEs? Which segments?
Yes, actually, you will see uptick in the second quarter, particularly in the MSME and agriculture, because these are the two sectors which we think that there will be a lot of credit absorption happening, because agriculture is doing well and MSME is all supposed to absorb a lot of working capital to restart the business. So we'll see this. And on the infra side, we have a few sanctions in the pipeline, which we have sanctioned, where the disbursements may take place. Some have taken place in this quarter and some in second quarter. So overall, by the end of second quarter, we should have a decent credit growth.
Also wanted to understand, Mr. Rai, that you have a large portion of moratorium as well. What trends within that are you seeing for those who have opted for the moratorium? How has this number changed from the moratorium 1.0 to now 2.0? And where exactly eventually you think it'll settle down?
See, this is a very evolving situation. For us, at this point of time, it is about 25% which is availing moratorium. So we need to see how the second quarter will play out. So it is an evolving situation, too premature to take a final call. So, but then we see that most of these customers, as they get down to businesses, they're opening businesses, they're paying. And we are also considering additional limits. So I don't foresee a bigger problem in this. So we may launch some soft recoveries from July, because as the business are opening and as we are considering their additional requirements, so we will try to get some recoveries also wherever it is possible, so that by the end of moratorium, that is by August, we recover some installments in SMA2, SMA1 accounts.
Mr. Rai, banks are raising capital right now to keep their balance sheet intact. Would you be also looking at raising capital, or would you be approaching the government in order for more recapitalization?
Right now, we are adequately capitalized. So as we go forward, we are to go to board on our capital raising plan. We are also waiting for the Q1 numbers as an amalgamated entity. Once we have that number, then we will discuss in the board and decide. But as the things stand, we are adequately capitalized.
So on an overall basis, what would you say would be a broad range for credit costs and asset quality and slippages?
Since you started with the ratios, as an amalgamated entity, we'll have much better ratios on all our NPA related, whether it is PCR, whether it's net NPA and all that. So we will come with the actual numbers once our board accepts all this, and we have the amalgamated balance sheet as of 30th June. So we'll give more color to that, but it will be improvement. And as a combined entity, we have a much bigger reach. About 9,500 branches, and in about 15 states, we have more than 5% market share. And a state like Andhra, our market share is almost 20%. So this is going to give substantial benefit to the combined entity to leverage our presence and grow on mostly the CASA, retail, and even the corporate. And it's the fifth largest bank in the country now. So I think that will also add a lot of value to the bank. And technology-wise, a lot of steps are being taken. We want to be in the common platform by January of next year. So hopefully that will also help all our customers to reap the benefits of advanced technology. And we are also looking for about synergy benefits of about 2,700 crores, both on the cost side and revenue side. So it is going to be a win-win for all the three amalgamating banks and also for the customer.